Well, what's up, everyone? This is the Matt Kreiser Show, and I'm Matt Kreiser. And today I'm so excited to have on Viktor Viktorov. He's the CEO and co-founder of REINNO. They're tokenizing real estate. They're bringing real estate onto the blockchain. They're making it fractional, just like if you're on Robinhood, you want to buy some fractional stocks. They're making it so you can buy a fractional piece of real estate. Viktor, welcome to the show, man.
Thank you, Matt, for inviting me here.
Of course, man.
Great
So tell me a
pleasure.
little bit about your company and how this all got started.
So everything started in 2017 when I was in London. I've been an event for Endeavor's event where a lot of smart people, VCs, and very successful entrepreneurs were at that event. And basically, I spoke with one of the VCs there, and he told me that he's investing in blockchain, in Bitcoin, in blockchain companies, and everything, and that's going to be the future. So I heard that a couple of more times down the road, and I said, hey, that's might be something, and I decided to check it out. So when I checked what is actually blockchain is and realized, what is the opportunity there, I was fascinated and said, hey, I'm gonna leave my position as a CEO of my other company, and I'll go there 100%. So
And so it's
that
just like
that was
that. You said, I see an opportunity and I'm gonna sell everything out and go for this thing.
yeah, absolutely,
So you do that.
absolutely.
And
That
what was it about tokenizing real estate that made you want to do that? What was the value proposition that made you say customers are gonna love this?
I haven't started right away with the real estate part. Honestly, in the beginning, I wasn't exactly sure what the product is going to be. So I thought first to create an index fund, and I have created the index fund for the top 10 cryptocurrencies. But uh, over time, basically when I moved to the United States, I met a lot of interesting people and family offices, and they started asking me, hey, can we improve the liquidity of our real estate, pretty much. And I said, oh, why not? I mean, let's think about it. Tokenization was sort of started at that time, tokenization of real world assets, and I thought, hey, I can figure out something here. Start thinking about it, and yeah, and step by step, knowing what the problem is, basically build that solution that is not just tokenization of real estate, because when you think about tokenization itself, it's not providing the liquidity that is needed. So you need an entire ecosystem in order to do that. And the major ingredient of that ecosystem is the lending piece. So when I thought about what the product is going to look like, I said, okay, tokenization is a promising technology, but it's not going to do it by itself. So we need to add something that is definitely going to make a difference, and that's our lending solution,
So I
pretty
guess
much.
explain to people if they have no idea what the background is, if you just showed this to someone on the street, hey, invest in REINNO, buy some real estate with us. What's the value proposition? What's special about it? Why would they want to do it?
Uh, so the main value proposition of of tokenization is liquidity. So first of all, that means that you can invest like $100, $200 in a real estate and participate in the real estate space, and actually be able to sell those tokens later on pretty quickly. That's the difference with the current, with the traditional, so to say, model of investing in real estate. Real estate is a pretty sweet business overall, but it's really not for everyone right now. So if you want to invest in real estate, you're going to need significant amount of money. But in order to do that with $100 or $500, $1,000, you definitely need something else. So crowdfunding platforms are actually allowing you to do that, but what they're lacking is the secondary market. So you can easily get in, but it's not that easy to get out. So you can invest, but it's really hard to actually sell those holdings in the crowdfunding space. So
Right.
what tokenization actually allows you to do is basically, because there is a lot of market that is building at the moment for tokenized real estate and any sort of security tokens. Basically, you can sell those tokens in those marketplaces, and that's the main value proposition.
So what I really liked that you said, Victor, there was that real estate's a sweet business, but not everyone can get involved. I used to work in real estate, and the truth is, in the U.S., where it's a lot of quality securities, is that if you know what you're doing and you're somewhat competent, it's hard to blow it in real estate, and it's pretty easy to make it. Would you say?
Yeah, definitely. It's very profitable business usually. I mean, and the risk is pretty low usually. So it's just not for everyone. I mean, it's not easy to find good deals. It's not easy to, if you don't have enough money to participate. And I mean, to participate in the good deals. You can participate in something, but yeah, good deals are hard to find. And so that's definitely one of the most important.
Right. I mean, I would want to know if I'm buying into Reno and I'm investing in this tokenized real estate, is it 100% equity and then I size my debt myself? You're talking about these loans.
Yeah, yeah. I mean, that's the idea. So basically, if you're investing in REIT, because you can invest in real estate in a lot of different ways. So, I mean, you can buy, REITs, or you can invest through crowdfunding platforms. What is actually happening is, you have a general partner that is deciding what the terms of the loans are going to be. And also, there are certain risks in order to do that. So just as an example, you're investing in a crowdfunding project. So when they get to a certain point, let's say the project is 10 million, and they're raising 3 million in equity. Basically, what is happening? You're investing as part of those 3 million. You're investing in the equity part, and then the general partner is raising money on the marketplace. So not on the marketplace, but not raising money, but borrowing the rest 7 million. And the terms are basically, I mean, you're not participating in the terms. They might not be really good at all for you, and you just agree with that. And what's happening if COVID hits your particular investment, and the tenants are not paying, for example, the bank is that's gonna trigger default on that loan, and the bank is gonna foreclose the building. So usually that's happening in the worst possible time when the market is down, and they're gonna sell the building at the worst possible moment. So what is gonna be the outcome for the investor is that most probably they're gonna lose 100% of their equity, and the market is gonna recover. Usually, I mean, that's the usual trend. The market is recovering in a year or in 2 years, and then the property is even more expensive than it was, but you're having zero out of this, and with tokenization and with our model, you're investing in 100% equity in property that is free and clear. And if you want to borrow money, you're basically borrowing only against your ownership. I mean, if you are not paying your loan, that's that's going to trigger default only for your equity. That's not going to affect any other participant in the deal. And the same, 90% of the or it doesn't matter, holding 10%, 90% of the people could default on their loans if the property is not showing cash and they're not able to pay the monthly installments. But you can have a separate a different revenue source, and you can pay with it your part. So you can protect your equity for some time, for whatever you want. But you're not going to be able to protect your equity if the project is $10 million and you just have invested 10,000, for example.
Right, that's really interesting. Now, one thing that I've seen that's really interesting is a lot of these tokenized real estate companies are looking to integrate with MakerDAO. I saw you guys are too. One of the biggest value propositions in real estate is that you get to take advantage of Federal Reserve policy. You get to take advantage of these really low interest rates, mortgage rates at all-time lows. And it's really exciting that tokenized real estate has this value prop where everyone gets to size their debt to their own ideal level. But what I'm curious with is when you're borrowing on this real estate, what is the interest rate? Because one of the biggest value props for people is that their cost of debt is lower than their cost of equity.
The cost is going to be the same as borrowing from the bank, pretty much with traditional mortgage, like 3%, 3.5%, depends on the asset. It might go to 5%, depends on the risk, but yeah, it's going to be pretty reasonable cost overall. So we even think that we can go below that. It really depends on the cost of capital. So I could say that our model is much better in terms of efficiency from a traditional mortgage, and the reason basically to be like this is just because the main cost of originating a loan is the initial cost of evaluating the building and the diligence and everything. So that's a pretty extensive process. It takes between 2 and 6 months, and you draft the documents, you have attorneys involved and everything. So what we actually have created is when we're tokenizing property, we are just doing this once, and then we're just adjusting that that price of that property, and we can have multiple loans with the same asset without even do the same due diligence, which reduce the cost significantly. I mean, as I said, that's the major cost. And what basically the outcome is when you're reducing that particular cost is either that's going to reflect the bottom line of the lender, or it's going to reflect the cost of capital. So the cost of the loan, so the interest rate. So usually what's going to happen, and I believe that's going to happen, the interest rates are going to go low. So the actual borrowers are going to benefit from this more effective model. So another major improvement is on the liquidation side, because usually what is happening when banks need to foreclose a certain non-performing loan, they're just selling it at a super high discount rate, and sometimes it's less than 50 cents of the dollar. Sometimes it's 40, 30 cents of the dollar. And what is basically, we all know about commercial mortgage-backed securities, right? So commercial mortgage-backed securities are created by non-performing loans, and those non-performing loans are sold for pennies, like 30, 50 cents, as I mentioned, which for the bank results in a huge loss out of this particular loan, and this loss that is generated actually is priced in the price, because the banks is assuming that 5% of the loans are going to be non-performing at some point. And what they're trying to do is basically they're saying, okay, if 5% of the loans are non-performing, and we do have like we need to discount them and sell them with 50% lost, we're gonna price it, in the interest rate, and that in when we're talking about tokenization and liquidation, you don't lenders don't need to discount that much those assets when they're liquidating them, because first of all, uh, you don't have a foreclosure procedure because you're taking tokens as collateral, and you can take possession over the tokens pretty quickly. So from a lending perspective, they can liquidate those assets pretty quickly. And another efficiency for the lenders is that they already have securitized assets, so they don't need to create those commercial mortgage-backed securities for and they are going through a couple of companies, and everyone has margins, so all those margins are reflecting the pretty low buying price. So when you're removing a lot of people out of the equation, intermediaries, basically that's going to reflect on the price of the loan as well. So the loan could be cheaper because of those major efficiencies.
That's really interesting. So I'd love to hear if you could integrate REINNO with any blockchain. I know a lot of the companies are working on Ethereum. Who would it be with?
We're integrated with, we're working with Ethereum. So, we don't need to integrate something in particular. We're just issuing our tokens in Ethereum blockchain, and we're using Ethereum blockchain for our tokens. And
what is the thinking behind that? Is it that in the long term everything's going to work out? Because right now the transaction fees on the network are pretty high.
Yeah, they're crazily high. It's just insane. But what we do believe is that solutions are coming, so that's going to be solved. But you know what? And there are blockchains that are performing much better than Ethereum right now. However, they don't have the data system that Ethereum has. Like, for example, the DeFi protocols are not. Most of them are running on Ethereum, and everything that is successful, like Uniswap, other decentralized exchanges, Compound, MakerDAO, all those companies are working on Ethereum. So even the transaction cost is just insane. I do believe that we're going to see solution, and there are solutions, they just need to be implemented. Layer 2 in Ethereum blockchain. There are a couple of solutions for layer 2.
And are those solutions coming soon, Viktor?
They are already here. They just need to be adopted by most of the protocols, and we're gonna see tremendous offload from the Ethereum network, which is gonna result in super cheap transactions.
And is that coming within weeks, months? Because the value proposition, the core, tenets of crypto is that it's sort of by the people, for the people. It's inherently populist and from the ground up. And when you have these giant transaction fees, it feels like I'm interacting through a bank, right?
And now, honestly, it's more expensive than a bank. Yeah. It's already there. It just takes time to be adopted because smart contracts are, super complex, and the risk to basically integrate new features which work, and then they're obviously working. The risk is, that all of the funds are already there, so if something goes wrong, it might go really, really bad. Funds could be withdrawn or something like, some vulnerabilities potentially could cost, millions, even billions of dollars of stolen funds. So that being said, it's not that the technology is not here. The technology is here. It's just the adoption and the testing and the auditing. Then it's going to take some time. When the biggest protocols are able to integrate with those layer 2 roll-ups, we're going to start seeing a dramatic improvement in the costs.
All right, so I want to run through a couple rapid fire questions with you. Are the passive income payments that you're receiving if you hold REINNO tokens in real estate that's through REINNO, tokenized through REINNO, are those continuously streamed? Once a day do you receive a payment? Once a month? How does that work?
It could be either monthly or quarterly. So if you're making payments once a day, it doesn't make a lot of sense with the costs that
Not on Ethereum, but come on, we're having a technological revolution here, right?
Yeah, I mean, down the road, we're gonna be able to make even payments on a daily basis. But that's gonna be more like hyped sort of
it's
thing.
More for fun. It's marketing. It's what I got $1 today type of thing, right?
yeah. And think about it. I mean, most of the tenants are not paying per day, so the tenants are paying per month.
Right. No, I saw Realty's post, and they've been working on this for a long time, is that they had to basically have sort of a buffer period if they're going to pull that marketing off because, like everyone's paying them monthly.
Yeah, I mean, it's just more marketing than an actual, nobody's paying rent daily,
So how do investors receive their tax forms? How are they benefiting from bonus depreciation? Is that just, hey, I put in my Ethereum address and send it over here? I mean, I don't know.
No, I mean, basically the tokenization is the same like holding shares in a company. So, and it's not like it is that you're holding shares in a company in digital form. So based on there were amendment that's been in effect in 2017, I think. Basically, you can have digital representation of share instead of paper certificate. So the tax forms are like you're making money out of your shareholding in a company. That's absolutely the same. I mean, it doesn't make any difference that it's tokenized. You have Ethereum based tokens that are representing your shares. You're holding shares in a company, and that's your dividend.
Okay, basically. So that's a little bit different than if I was, an LP in a real estate investment where I would the tax benefits of depreciation and things like that would directly pass through to me. Is that not the case for something like this?
I mean, it really depends on the setup. It could be the case because, I mean, it could be set up like, you're an LP, but it could be set up like, you're just regular shareholder in LLC and you're having voting rights as well. So it really depends how the setup is done. That's flexible. It doesn't mean that it should be done one way or another. You can set up.
And how about for REINNO? Are the tax benefits passed through to the token holders, or is it more like owning shares in a stock?
It's like more shares in a stock.
Okay. And I'm curious, who actually sources the deals for REINNO? Are you acting as the GP as well, or are you acting more as a broker dealer, tokenizing this real estate and working with different partners?
In our case, we're acting as issuers, but because.
And is like an offering memorandum being given out to people who are registered and want to look at it in terms of who's actually managing the property?
Yeah, exactly. Yeah, there is an offer memorandum for every property that is tokenized, so people can check it out and see, what are the terms of participating. There is subscription agreement. There is different type of shareholding agreement as well that they need to sign when they're investing. I mean, it's not a traditional shareholding agreement because of the tokenization, and we want to have more, so to say, options for minority owners to be able to participate, to vote, and do more things, more activities.
Yeah, let's talk about the rules. I mean, who's allowed to actually invest in this? Do you have to be a millionaire to invest in this? Or is this like Robinhood? I can go on the app and invest in 10 minutes and I'm there. I got my tokens.
Yeah, I mean, I wish it could be like Robinhood, but it's not right now because under the regulation D, you need to be a credit investor. So
So the government's getting involved here. They're making rules. They've got rules that are making it a little bit harder for you to get everyone involved.
yeah, I mean it's just we need to comply with the Security and Exchange Commission regulations. So basically, every offering is done under Regulation D and Regulation S. So yeah, I mean we have all our restrictions. However, the good news is that SEC has some amendments recently that basically is going to allow people based on their education. They don't need to be millionaires, but just based on their education, knowledge, or experience, basically to be able to invest, which is going to be a significant improvement. Is going to allow much more people to participate. And another amendment that we're basically going to be able to be like Robinhood when we get this license is that they increased the crowdfunding regulation limit from 1 million to 5 million. So basically for properties that are or offerings that are below $5 million dollars, we're going to be able to onboard retail investors. So pretty much everyone is going to be able to invest with $100 without being a credit investor. So that is coming, and that is a new amendment. But still, we can't offer that such type of service, at this point.
That's great. I mean, I feel that's so important because there's really two types of liquidity. I mean, it looks like we've already got that. Hey, I can take out a loan on my tokens right away. But then there's the liquidity of how much is this stuff actually going to trade in the markets like a cryptocurrency? How much are those Uniswap liquidity pools actually going to be used? And if there's not enough KYC people and not enough users, you're just not going to see the same activity. I mean, obviously, you're not going to see the same activity you'd see with a cryptocurrency, but I imagine one of your goals is to really see that tradability in the marketplace increase as well over time as this evolves.
Exactly. Yeah. I mean, it's still a bit of a gray area. When we're talking about trading the tokens on Uniswap, for example, because you need to pass KYC and AML in order to buy those tokens. So it's not just that easy to get there, and it's super easy to do it. You can open a pair in Uniswap, but from a regulatory standpoint, that's not a good idea. I mean that might trigger a domino effect with a lot of issues for the issuers and for participants that are executing transactions like this. But we still probably need some clarification and to see what we can do and what we can't. What we are expecting, to basically see more are exchanges like T0, Open Finance, to basically start working. I mean, any sort of ATSs, not only here in the United States, but in our
And these are
jurisdiction.
like marketplaces that are KYC only participants.
Yeah, those are not like DeFi organizations, but they're heavily regulated organizations called alternative trading systems. Basically, those are exchanges that are being regulated, and on those exchanges, people can trade tokens. Security tokens, not cryptocurrencies, but security tokens. like tokenized real estate and so on, after a holding period of 1 year, usually. It really depends. I mean,
Wait, so you have to
there are
hold it for
certain,
1 year?
yes, yes. I mean,
Wow,
if
man.
it's
I mean,
regulation,
I love what everyone's trying to do with security token offerings, but it seems like just the innovation's being hampered by these rules. It's not a fair fight against these. There's digitally native assets, and then there's these assets that have so much fundamental value. They have, cash flow. They're solid businesses, but they're not being allowed by the government to innovate at a level that these natively digital assets are.
yeah, I mean, the government is trying basically to protect, uh, retail investors, but actually it protects them from making money in most of the cases, So, um, however, it makes sense, but in a way, all those restrictions because, especially if you're investing in startups. I mean, that's a pretty risky bet, So people can. It's not like investing in real estate. Even in real estate, not every deal is awesome, but it's the risk is different than investing in startups because by investing in startups, you might end up, with zero. I mean, you might lose everything, and that's going to be pretty common. In most of the cases, that's going to be the outcome. While investing in real estate is completely different. Uh, Risk than investing in startups. But we are under the same regulation. That's why we have all these holding periods, accreditation checks, and all this regulatory framework that is stopping us from innovating. But I hope that the government is making some good steps forward. It makes the process a bit easier, but still it's not like with trading cryptocurrencies for sure.
Right. Yeah, that's really interesting. I mean, I'm curious, are there any marketplaces because, you're choosing to invest in real estate in the United States, and it's a bit of a conundrum because uh the United States, Great Britain, what Western countries, whatever, they maybe have some of the highest quality assets to invest in, but they're also some of the most highly regulated markets. Is there anyone who's trying to do what you're doing at REINNO in an unregulated market or a natively digital market where these types of regulations wouldn't be required?
I don't know market that is not regulated. Honestly, I could imagine that some people were trying to basically, I mean, selling tokenized real estate outside of the United States, where rules are not sort of not quite clear, and that's how they're trying to avoid any sort of regulation and make the market more liquid right away. But that's going to be sort of a short-term solution. I mean, there's going to be a sort of a legal framework, and I hope that, especially for real estate and other assets, like for example, if you're tokenizing gold, if you're tokenizing silver, why should they be considered the same as like investing in startups or high risk assets. So that should be sort of separated somehow. And
Right, that's a really good question because when I think of one cryptocurrency, there's one called PaxG, right? It's like Paxos Gold, and it's backed
yeah,
by gold supposedly. Um, that seems to be trading without any KYC out in the open markets.
yeah, I'm not sure about such type of assets. Honestly, like gold, if they should follow the same requirements, I guess so, but I'm not 100% sure. And they're using a so-called synthetics tokens. So basically, when you have something like this, you're sort of could try to avoid some of the regulations by, you're not directly selling the asset itself. You're just backing sort of another coin. But honestly, I'm not sure, how
Yeah,
from a
right.
regulatory standpoint,
Yeah,
how
I'm
good
not
that
sure that
is. And
Pax Gold is a synthetic, but for people who are interested, synthetics are really cool in the sense, but the downside of them is you have to provide extra liquidity. Like you're
yeah,
over collateralizing. If you want to make a fake Tesla share, you have to over collateralize it, right?
exactly. Yeah, I mean, yeah, Paxos, I think it's not synthetic product. Yeah, you're right. Because they're backing everything with gold and it's representing some ounces. But yeah, I'm not sure honestly from a legal standpoint how that is said. I'm familiar with real estate, and I can tell you that if something is security, you need to comply with the securities regulation. I mean, you can sell those securities freely
Yeah,
everywhere.
that would end badly for you.
Yeah,
So let me
yeah.
ask you, Victor, what will you consider success in tokenized real estate? It's a I heard something like it's a $300 trillion asset class, biggest asset class in the world. What is your vision? What's the future? What will you be like, okay, we're starting to make it? Because it sounds like right now we're in the nitty-gritty of the regulatory. We're kind of creeping forward step by step.
I mean, what we figured out is that even if you have hard times to basically sell the tokens and just basically do stuff like trading them on DeFi protocols or exchanges like Uniswap, you still can stake them. You still can benefit from staking token, generate other synthetic assets over by using those tokens. So I mean, it's not that you can't do anything or you're completely stuck into the regulatory framework. So we're working on DeFi protocol that is basically going to allow you to stake those tokens there, and that's how you're going to get pretty much instant liquidity. Um, but yeah, I mean, that's a different story. However, another thing that we're bringing to the market are our loans. So basically, we can tokenize property, we can provide loan, and this loan is much flexible and better than a traditional mortgage because people can borrow with today. Let's say, I mean, if you're having a building, and that's a real case. We are tokenizing now. Uh, to properties in order to provide loans for them. The loans are going to be for approximately $12 million. So basically, what is happening is, our client is coming and saying, I want to borrow money. I don't want to sell my building. I just want to borrow money. I want to refinance and tokenize and use your solution. That's everything. So basically, we can tokenize property without selling it and just provide loans by using the tokens as collateral. And the borrower is a traditional borrower. Instead of getting a traditional mortgage, he might use our solution just because it's better and the terms are the same, but it's much flexible. So if he at some point decide to sell part of the tokens, he's gonna sell them much faster because the property is already pre-approved. So he might decide to sell, let's say, 100,000 to UMAC, and you can immediately just invest into that property by investing only 30,000, and the rest 70,000 you're gonna borrow, but everything is gonna happen in the same day. So you're gonna borrow 70K, and you're gonna purchase real estate for $100,000 the same day without due diligence and everything else. So that's the difference.
Yeah, and I think that value proposition alone is to gets everyone excited about real estate tokenization because that alone is just a huge advancement.
Yeah, exactly. I mean, so it might be step-by-step process, but our goal is basically to see every property tokenized in a digital form in the next 10 years. So I think we're going to see a massive shift.
Yeah,
the
it's just when you
tokenization.
hear that first really exciting value proposition and then you start to dive into crypto and then you're like, "Oh, there's a zillion more exciting things that can be done here." And it's like, "Oh, wait, regulation. All right, we got to just take what we can get here. This instant uh, collateralizing of my real estate is such an amazing value proposition, but there's so much more that can be done."
Absolutely, absolutely.
Yeah.
I mean,
So I got to
and it's
ask
gonna
you,
be done.
hey, I saw on your LinkedIn profile, you described yourself as never losing enthusiasm, never stops, never gives up. That gave me a little chill. I was like, I can identify with that. We all have to hustle. We have to make it. You didn't just become a CEO and founder out of nowhere. Tell everyone a little about your story and how you got here.
Uh, well, it's a long story.
You can give us the short
So,
version.
yeah, I started my first business when I was 18 years old. Now I'm 34. Um, so when I just graduated my high school education, I got started with a distribution company in Bulgaria, and when I get 20, I decided that that's not going to be my business. So I need to do something that is more scalable. I mean, distribution business is not bad. It was pretty profitable venture at that time, but I wanted something more, high tech, interesting and so on. And I started an e-commerce business. At that time, it was 14 years ago, almost. Uh, So that was quite challenging, first steps in that space in a new area, that was quite of a challenge, honestly, because distribution business is sort of something that you can start right away and it just going. While, when you get too early into something where, I was in Bulgaria, I mean, e-commerce was sort of popular in the United States at that time, you know, but in Bulgaria, it was just the beginning and it was really hard to get it off the ground. So that was my first major challenge in the entrepreneurship. So yeah, it took me a couple of years to even start generating some revenue.
A couple years just to start getting revenue.
Yeah.
That's what never stops, never gives up looks like, people.
Yeah, it definitely was difficult, but yeah, I had a family. Uh, Basically, nobody at that time. I have tried to raise some funds because I spent all of the funds that I had for my distribution business, and I have tried to raise funds. That, nobody wanted to participate, and at some point, I was just sure that that just gonna work out, but wasn't sure when. So that was the question, and so yeah, I at some point find a model that you know I saw that a model, a product market fit that's going to work now today, and then I just made a couple of pivots, and at some point, I figured out a niche that is going to work pretty well. The market was more mature at that time, and we have just started. And I started with basically when I figured out what is working, I borrowed. It was like $25,000 from the bank. That was the maximum that I was able to borrow, at that time. And because I was totally broke at that time. So with $25,000,
And how long ago was this? How many years ago?
uh, that's uh, that's probably 10 years ago. Yeah, ten
Okay, so
years
you were
ago.
starting in e-commerce pretty early, relatively speaking.
Yeah, yeah, yeah. And it's difficult when you're starting early, but you're ahead of the competition if you're not, if you don't give up, because most of the people are giving up. Usually, that's the outcome. That's what I'm seeing in a lot of industries. even in the tokenization space. So basically, what's happened at that time is that when I saw that we have a product market fit, and borrowed those money, the just the project started generating cash flow, and we become a market leader with 50% market share. Not this year, but a couple of years later. We crawled to Spain, to Portugal. We opened business there as well. We opened in 7 markets, operation in 7 markets. And yeah, I mean, at some point we holded 50% of the market in Bulgaria for sporting goods. So that was significant, but I can't say that it was a straight path for sure. Was quite difficult. And if you know the movie Pursuit of Happiness,
yes,
it's something like this without being homeless. Very similar.
something like that
So
without being homeless. I like it. So what motivates you as an entrepreneur?
What motivates me is that I definitely wanna disrupt things. So I mean, my e-commerce venture was like wasn't that disruptive. It was disruptive for our region, but I mean, it was something that it's already there. And now, my goal always been to change and improve things and industries, and to make significant difference. So, that's why, I gave up my, CEO position, in my e-commerce business, moved to the United States, just because, I want to do something that is much bigger than, just making money. Of course, the outcome might be that you're making a lot of money, but that's not the goal. That's usually not the goal that the entrepreneurs have. It's just to make significant difference in significant space. And real estate is always been sort of a passion of mine. I always been interested, and I bought a lot of real estate for myself previously in Bulgaria, and I've been always interested in that space. But you just buying and holding real estate, it's a good thing, but disrupting an entire industry, it's completely different ball game. So that's something that excites me. Make significant difference at some point. Just like and not stopping there. Make difference overall.
Yeah, I mean, there's
This should be
disrupting,
a
and then
bit step.
there's disrupting, and then there's disrupting the entire real estate industry, the biggest industry in the world.
That's part of the goal. But if I can do something more than that, I want to do it. I do have other ideas as well later on, to basically improve a lot of other areas related with real estate, like building, for example, better communities or even better cities, smarter cities. I don't think that the current, for example, infrastructure and the way that our cities are structured
Did you see
is
what they're
good
doing in
enough.
Nevada with smart cities?
Yeah, I'm following all kind of developments and technologies that are happening in the real estate
You got to put up like
space.
10,000 acres or 100,000 acres. Can you afford that?
No, not now,
But
but
soon.
some point.
I think some of the other people in crypto were interested, right? Draper, I think, wanted to buy some land. Another company's already bought up a bunch of land, but it's an exciting development.
Yeah, Elon Musk just yesterday announced that he's gonna build a city in Texas,
Oh,
a
very
smart
cool.
city in Texas. Yeah, around SpaceX. So I mean, uh, I don't care if I'm gonna do it, or I can support somebody else to do it. Somehow. I definitely wanna be part of part of this, and make life different. So always think about how we can make things better. And if you think about that in longer perspective, AI is going to take most of the jobs, and we probably if we are not doing something that is sort of unique, or we are not entertaining people or whatever, I don't know what job's gonna left for people to do that are not gonna be done better than machines. But basically the outcome is gonna be that most people are gonna need a basic income to survive, and that's basic income. I mean, it's gonna be like social society where the government is sending checks like in COVID-19, all the time, and that's going to be pretty exciting to see. But I think people need to find a purpose. That's going to be the main challenge. What is going to be a purpose to even exist? That's I'm pretty interested in that topic for sure.
Yeah, I mean, well, if everyone was just built like you, we wouldn't have to worry about it. I mean, your psychology is how can I make it better? I'm never going to stop. I'm never going to give up. And I'm always going to think of how to improve. But you're saying that some people might just be getting checks. But if everyone has the mentality of how can I make things better, then they'll always have something to do.
Yeah, definitely.
All right,
But
Victor,
yeah,
where
I
can people
mean,
find you? Where can they follow REINNO?
yeah, people can find me in LinkedIn, and they can check our website REINNO.io.
So that's
And
REINNO.io.
yes, thank you for the clarification. And yeah, I mean, we're in all social networks like LinkedIn, Twitter, everywhere. So people
All right,
can
Victor,
find
I
us
appreciate
everywhere.
it. And thanks for listening, everyone.
Thank you, Matt. Have a good one.